Hello, traders and investors. Steve Gans coming to you from Kauai, Hawaii. So, going through the weekend update. So, the week was actually a pretty significant up week. If we come over here and take a look at this move, I mean, that's a fairly significant 1 week move with a big gap up even here in the middle. So, pretty powerful up move right into where I had expected we would come, which I was thinking was going to be some form of potential resistance. Now, it may still be some resistance. It did pop above 5,500 going into the close on Friday, which is a bit of a bullish signal. But as we'll see in a moment when we look at SPY, it was done on significantly lower volume. So again, we'll have to see how that holds up at the end of the day. So let's just walk through our indexes. Right now, I feel like we should be in a little bit of a resistance zone here. If we do pop much above this 55.25 or so where we're at right now, I think we could easily, move up right here to this 57.50 range would be the next area of what I would consider to be significant resistance. So that said, of course, news is going to, pardon the pun, trump anything here in that if some sort of news comes out, we are a heavily news-driven market right now. So we take a look at the SPY, and of course, it's going to look exactly like SPX. No real significance there. We can see a little bit down here if we take a look at the volume. If I can enlarge this window here, the volume is pretty low on Thursday and Friday. So while we did have up days, the volume was off a fair amount. So that's kind of I don't want to say a bearish sign, but that takes a little bit of steam out of the bullish case, the fact that would be so low. Now, we look at the VIX. Well, the fact that the VIX is falling off here and falling off fairly fast leans us back to the bullish side. So again, really kind of mixed where we're at right now. Had a very hard run in all of the major indexes for the week. Again, same thing here in the Qs, significant move up, and also into a bit of a resistance area here. So we're going to have to see how this is all handled here this next week. The volatility on the Qs also has dropped off quite a bit. And then we look at IWM. IWM, or the Russell, was actually showing even a little bit more resistance here. The Russell here did not punch above the highs that it had made on Wednesday or Thursday. So the Russell, at least right here, is maybe even lagging a little bit. And then if we look at volatility on the Russell, we can see that its volatility, my internet connection here is a little bit slower. The volatility on Russell did not fall off quite as much. So again, that leads us a little bit more into that bearish case. Now, another item I wanted to take a look at was a couple of key economic reports that have recently come out. And these are leading me down a bearish path over the next few months. The reason for that, if we look at the Consumer Sentiment Index, it is almost as low as it was back during COVID here, and it's going down quite rapidly. In addition to that, if we look at the 5 to 10-year inflation expectations, those are really hitting some high numbers, highest since 1991. This is from University of Michigan, which produces some of these standard economic reports. So both of those are leading me down a little bit of a bearish path over the coming months. Now, right now, I'd have to say I'm a little more to the neutral side, but a few months down the road, I think definitely leaning toward the bearish side based on what everything that is being shared with us right now. Even though tariffs have been curtailed back, there's no doubt that if they remain in place, it is going to have an impact on the costs that we pay for pretty much everything. And of course, that's what is driving these particular expectations. So that's kind of where I'm at as far as looking at our markets here. this weekend. This is April 27, 2025, and my expectations going forward.